welcome to the Aramir Trader Tuesday. We're special guest Scot Ruble from Stratagem Trade. Scott's in Chicago. I grew up in Chicago, so we were just talking about the old days where how Chicago used to be versus what it is now, and food scene and all kinds of things. But it's a pleasure to have Scott here. Scott was a market maker at the CBOE, tons and tons of experience, great teacher, great trader, good friend. And Gammy and I are looking forward to seeing you in Chicago in a couple weeks. So thanks for coming, Scott. And this Trader Tuesday is kind of new. We're just kind of talk and get to know a little bit about you and maybe how you got started and your journey on the whole trading scene.
No, I'm glad to be here. Thanks so much. And there's a new format for me from you, so I'm looking forward to it.
Yeah, it's something new. I thought it'd be nice for people to get to know some of the people in um, our realm, if you will. Just who are these people? Where'd they come from? How'd they get to where they are? That kind of stuff. Any special things that you like to do or don't do? Whatever you want to talk about. So I guess the first thing is, how'd you get into trading? I know you were on the floor, but how did that happen? How did that come to pass?
Oh, that was a fluke. I had no interest in going into the trading floor. I didn't know anything about it. I just took a summer job there before medical school because I didn't know what I wanted to do when I grew up. So back then, doctors could make a living. Nowadays, probably 5 or 10% of my students are doctors looking to get out of medicine. But
Yeah, my best friend growing up went to med school and he's a vascular surgeon. He said 3 out of 5 days he wishes he never went to med school.
well, one of my students, this is a true story, one of my students is one of the most successful neurosurgeons in the country. He's in Texas and he devised a way of getting to a tumor at the bottom of the brain. Normally, they have to take the jaw out and go through the roof of the mouth. And it's very invasive. You never chew right again. You're spending a long time in the hospital. But he takes the cap off the skull and lifts the brain up a little bit and floats it on like a bed of air, like an air hockey game. Can cut it out, put it everything back together again, and the person's going home in a couple days after they get seizures under control.
Wow.
And people from all over the world fly out to have him perform the technique so that they can chew and eat again and everything else. And because it's so much less invasive than the traditional method. And he has never had a lawsuit, which is shocking. Um, and his malpractice is over 1 million a year. And
Wow.
he's calculated he has to work until like December 14th between the staff and everything else before he starts making money. So
Whoa.
he gave up trade. I mean, he gave up being a surgeon to become a pig farmer and said he was
Okay.
making more money as a pig farmer than he was as a surgeon. But then
Well,
he started getting a little bit older and down. It was too much work to be a pig farmer. So he,
it's something like actual work, right?
yeah, it was actual work. And so he came and learned how to trade from me. So it it was but I was planning on going to medical school, but my parents didn't have any money. My mom was a part-time nurse and my dad was a cop. And I have two brothers, like, we were all going to private universities and there was just no money for medical school and stuff. I had to take a summer job, and one of my buddies just got me a summer job on the trading floors. And the first week I was put on the Chicago Board of Trade, and then I was moved to Chicago Mercantile Exchange, which is gladiator pits. And I'm living in the frat house at the time. It's a little bit rougher lifestyle than I have right now. But I see constant fights breaking out. I see one guy run across the pit and stab another guy in the chest with a pencil. And I just said, I'm never leaving. I love this place.
No,
And-
people have to know you were a wrestler, so that kind of appeals to you. That kind of
well, yeah, it's a frat. It was the frat house mentality. I mean, the emotions is not the violence, but the emotions of how heated and the energy down there and the screaming and everything else. I mean, if you take the movie Trading Places and multiply it by
it's a
10,
great
that's what
movie.
it was like. And I'm like, and it was just so fast paced. Um,
So did you
compared
start out
to
as a runner?
no, I started out as a clerk. I skipped that whole runner thing.
Okay.
Um, and I it was actually at a company called O'Connor, which is a think tank, and I didn't know the serendipity going on at the time, but this is like one of the well, it is the premier trading company in the world. It was a think tank that was started with a couple $1 million loan by the O'Connor brothers, who were actually the inspiration for Trading Places, the movie. And from that couple $1 million loan, 10 years later, they sold 10% of the company for $1 billion.
Oof.
And it was all guys who went to like MIT, really, really bright guys with master's degrees in math and stuff like that. And, I was the dumbest guy there. But um, we're talking super geeks. And we were the first ones to figure out how to price volatility in an option, which is the main component of an option. And when you can see and measure and quantify volatility swings from 9 to 13, 9 to 13, 9 to 13, which is what the range was on a daily basis back then in the S&P, and you're just buying 9 volatility all day long, sell at 13, buy 9, sell 13, buy 9, sell 13. We were making so much money. Money wasn't even the issue. It was keeping it secret on how uh and what we were doing. And so it was like the offices were actually kind of like the movie Get Smart. Now you got to be above 50 to know what that is. But the opening scene Get Smart with all the doors and everything like that, it was sort of like that. And it
Okay.
was crazy. It was just the craziest environment ever. Um, and it was so much fun every single day. There was a different story because these traders are just nutcases. Um, literally 3 traders, 4 traders have been on Oprah for having such screwed up lives. One was the inspiration of War of Roses. Another one was like I mean, it was like these people were the craziest people in the world. Every single day there was a story occurring real time that you couldn't tell anybody. You couldn't tell any of your friends because they'd think you were just making it up. It was just fun times all day long. And I'm like, I'm never leaving this. I don't care if I make money or not. This is what I want to do the rest of my life, and I never look back.
So you were what, probably early 20s when you did that?
Yeah, well, I think I was 20, 21. So yeah, I was a baby. I mean, I was still living in the frat house. So um
And then you ended up working your way to the market maker level. And
yeah. Yeah.
how'd that happen?
Um couple guys from O'Connor left and started their own firm and took me with. And within I mean, I was always a workaholic. I love it. And they say success is finding a job that you would do for free, because then you never work a day in your life. And I would have done this for free. And so I was every waking moment. I was the first one in the office, the last one to leave. And so when these guys left, start their own firm, they took me with them. And within, I don't know, 6 months or so, they put me on a seat. Um, and then We eventually got bought out by Spear Leads and Kellogg, which is the biggest market maker firm in New York on the New York Stock Exchange. And so everybody had a chance to either stay as part of the Spear Leads family or go off on their own. And I just took my money, my bonus, and went off on my own. So never looked back. It was cool times.
You had a good story. I think it was a '87 crash. You were selling puts to people for crazy amounts and made quite a bit
Well,
of money that day.
yeah, I mean, in the '87 crash, this is right when I was, you know, maybe down there a year or so. I don't know. I'd have to really do the math, but I was new. I mean, I was probably right at the tail end of my first year, the start of my second year down on the trading floors. I was on the mercantile exchange, and they have something called the book, which is just all the orders the brokers don't want to hold on to because there's a very small chance that they'll ever be filled. It's just so far away. It's like trying to sell the SPX 5500 call for $20 right now, or the NVIDIA 2000 call at $10. It'll never get filled. A fluke has to happen. And so anybody that was trying to close out positions was selling their puts at a nickel. And because back then everything was in sixteenths everywhere, but on the Chicago Mercantile Exchange, everything was a nickel and they had a 500 multiplier. So a nickel was $25. And the Friday before the crash, it was apparent that the something was broken. When you look in the S&P 500 futures pit, which was right next to the options pit, you saw the biggest gunslingers in the world. These guys they're betting their whole lives, their homes, their cars, everything, every single day, and you never saw fear in them. I mean, these guys are, for lack of a better word, some of the ballsiest guys you ever saw. And when you look in that pit and you see the confusion and the concern and the fear, guys are looking at the market and saying, something's just not right here. You knew something was broken. And so just went in and started buying every nickel put in the world I could find. And then on Monday, when the market was crashing, the market was crashing and pretty much just free fell the whole way down. So I didn't sell anything on Monday because it was pretty much broken the whole day. On Tuesday, things started trading a little bit and people started going back trying to close their options position, mostly brokerage firms closing people's trades for them against their will. They just were shutting down people's positions. And these brokers were coming in asking for what's the market on this? What's the market on that? And it was so crazy because you didn't even know what the price of the future was. I mean, you'd see the future trading $10 higher on one side of the pit than on the other side of the pit. It was that crazy. And so the options markets were extremely wide. They didn't even have regulations on how wide you could make them back then. And so someone came in and asked, what's your market on the 150 put? Now, this is a 150 strike put in the S&P. And
Wow.
we were selling those at $50, the 175 put for $75. So essentially, the S&P had to get below 100 to hit break even. We were selling it on something like 300 val.
Oh man.
So, I mean, it was hard to even calculate, even though we were the first ones to be able to calculate volatility. No one else was doing it. Maybe another firm called CRT was catching up in terms of knowledge about options, but they probably were able to calculate volatility. But even then, when you're calculating volatility and Vega is 40 cents, but the options are 75 bucks. How accurate is it? You know? So everything was a rough guesstimate. I mean, that weekend after we free fell on Friday leading up to the crash, I think we fell 108 points on Friday, which was crazy amount of points. And um, back then, now 100 points in the Dow is like a rounding error, but back then it was huge. And after we fell, it was apparent that something was possibly broken and that Monday was going to be a disaster. And so I ran sheets, pricing sheets on options on 50 vol, 75 vol, 100 vol, 200 vol, 300 vol. And the computer department kept coming down. Are you sure 300 vol? It's not 30 vol? Yeah, 300 vol. And it was crazy because you got to remember leading up to that, we were in pretty much a 9 to 13 daily range in volatility. And on a crazy day, we'd hit 16 or 17. Now I'm saying I need vol on 300. And I was selling it above sheets. So it was crazy times. It was fun. I mean, it got so crazy that they just had to we kept shutting down and having to reopen and shutting down, reopen. And you'd sit around for an hour waiting for the announcement to see if we were even going to open up again the rest of the day.
So then you did that for a few years, and then what the electronic stuff started taking over, and the market makers were kind of transitioning to
Yeah.
electronic off the floor.
Yeah. From about the late 80s until mm, 90, I'm thinking 96, 97, somewhere around there. Um, I was, just on the floors, and then they started putting, this is right when technology started changing a little bit. And I had the first T1 line in like the suburbs put in my house because I was getting old and lazy. And if I could do this from home on days that I expected a slow market, why commute the hour and a half each way downtown, especially on days where it's snowing or raining and the highway was going to be backed up. And so I started trading a little bit from home. Um, the platforms weren't that great. I was basically um, only able to get quotes and then have to call up a broker and put the order in on the floor. But I could at least get real-time quotes with the T1 line. And then technology started really catching up as Thinkorswim guys were leaving the trading floor too, like Tom Sosnoff and Scott Sheridan, and those guys were friends of mine. They were in the OEX pit. I was in the OEX pit, in the S&P 500 pit, the SPX pit. So I know those guys well, and they left because the opportunities on the trading floor as a market maker were vanishing. A lot of the trades were being done by computer firms off floor. The market makers weren't getting really any edge like they used to be. So why stay on the floor? Why pay all that money to be a member of the exchange if you don't have an edge when you can do the same thing at home? I mean, basically, everybody listening to this has more of an edge at home than I had on the trading floors. So why pay 18,000 a month to be on the trading floors? So but at the time there was really no good brokerage firms out there to accommodate you. We people like me and Sosnoff and those guys were all trading from home, but we'd still have to call the trading floor and call the order into one of the broker friends of ours, and they'd have to execute it because there was no platforms to trade off of. And Tom, to his credit, had the great idea to start a brokerage firm that would accommodate this stuff. And so he started Thinkorswim, and then life got pretty easy. And that was sort of the trend of um, the trading floor is evaporating and everything going electronic.
So when you were on the floor, did you do any kinds of strategies besides just buying and selling singles? Were you doing verticals, butterflies? What kind of stuff were you trading?
Well, I was mostly in the SPX pit. That's where I spent most of my time. And when I was down there, the SPX pit was maybe 10 guys, and it eventually grew to about 30 guys. But it was a lot more complex that nobody really understood because the futures would expire in the morning, the options would expire in the afternoon. So if you were hedged, you had a full day of being unhedged, and nobody could figure out how to eradicate that risk. And there were games going on with AM options and PM options that nobody really understood. It was too complex for the average floor trader who was intellectually lazy to try to figure out, which I loved because if you're spending time and figuring this stuff out, you you have the edge. And the great thing about the SPX pit is every big firm in the world goes in there to hedge because it's one-stop shopping. There's more money trades hands in the S&P 500 pit in a day than the entire New York Stock Exchange combined. Think about that.
Pretty
So
incredible.
it's crazy amount. I mean, but unless you're down there, you don't even believe it. It's another one of those stories you can't really tell people and they believe because literally all day long you'd get some firm coming in with these weird trades. I want to buy 82,000 of these, sell 66,000 of these, buy 14,000 of these, buy 204 of these, and sell 6 of these. What price will you do that for? And then they'd all go up. And then everyone's reading the newspaper again. I mean, it was just incredible the amount of money that moved there. And so I love that pit. And so when you ask what kind of trades I did as a market maker in there, I would participate in those type of trades because everybody was sort of obligated to participate. But my favorite trade down there was really the arbitrage between the SPX and the OEX. Okay, the OEX is the S&P 100, the SPX is the S&P 500, and the top stocks in well, all the stocks in the S&P 100 are in the S&P 500. And the top stocks are really what's driving the two indexes. And there's a general trend where when the market is in a bullish trend, for the difference between the SPX and the OEX to expand, meaning the SPX will outperform the OEX. On the way down, it will fall more than the OEX will fall. I mean, you look at the SPX price versus the OEX price. I haven't even looked at the OEX in a long time because it's a dead product. So let me pull that up real quick. But the OEX is at 2450. The SPX is at pretty much double it at 5200, right? The OEX was actually higher than the SPX at one time. But because we keep going higher and higher throughout time, and the way things are weighted between the two indexes, the SPX is now twice as high as the OEX in terms of price. And so I would love to be playing long an option in the SPX and short an option in the OEX at synthetically the same strikes. And as the market would expand, it would create a $5, $6, $7, $8 call spread for free. And I'd do the opposite on the way down, where I'd be long SPX puts and short OEX puts. And on the way down, they may be the same percentage out of the money to start with, but as the market's falling and the SPX is falling at a greater rate on a percentage basis than the OEX, it's expanding. And so it's creating a $2, $3, $4, $5 put spread for free. And so it's really a pair trade, no different than Coke and Pepsi or what have you, but nobody really understood that either. And so this was like probably 50% of my trades was the correlation between the SPX and the OEX. And as such, I've fallen in love with pair trades. And that's why, I know you follow me, Tom. And so that's why you see me do so many Viper trades, which is the correlation between the VIX, the volatility, and the SPX. It's the same principle.
And you also do a Spider QQQ pair trade too, right?
Yeah, Spider QQQ. You can pretty much all of these indexes, as long as you understand how they're made up and what's going to happen on a move higher or lower, you can pair against each other. The Spider QQQ is not quite as clean because say the SPX versus OEX or the SPX versus the volatility products, but you'll see like darn trends where they're coming after Nvidia and Apple and AMD, the high tech stocks. You can be long the QQQs and short the spiders. And as they keep coming after these tech stocks, the relationship between the two expands and you're getting free spreads.
So maybe you want to talk a little bit about Stratagem and how that came about.
Well, when I left the trading floor, I was still trading. I was doing it from home, but um, it doesn't require a lot of time once you get into the habit and you position trade like I was doing. I wasn't doing a lot of day trades and stuff from home because I just felt like I couldn't act fast enough. And the good brokers like Thinkorswim and Tasty, et cetera, weren't available at the time. They were just in their infancy. So nothing was really real time enough where you felt comfortable enough day trading. So it was all position trades. I didn't need a lot of time to position trade something a week out in time. And I was bored. Um, I missed the camaraderie of the trading floor. I mean, you'll hear these professional athletes who retire say the worst thing about retiring is not necessarily playing the game, but like the practices and hanging out with their friends at practice and stuff. And it was sort of the same thing. Um, but my friends who weren't in the trading business, they all had real jobs. So from 9 until 7 at night, they weren't around. And when they did get home on the weekdays, they were exhausted and didn't want to go out and play and cause trouble. So I sort of had all this free time and I got asked to lecture one time in front of a group of people and being stage fright, being the guy during the school plays, Christmas plays when you had to sing. I was in the back hiding so nobody would see me. I was a little bit apprehensive. Um, but I agreed to do it as a favor to a friend. And I spoke in front of a group of people one time, and they were so appreciative and so kind and benevolent and cordial. And we all went out to eat afterwards. And it was just, they were so very, I guess grateful is the only word I can't come up with a stronger word to describe it, just how much gratitude they had that I took my time out to go and talk to them. That it was really, it felt like I was giving and helping, and that my efforts were more appreciated than being in the house with the family. And so, um, anybody who's been married a long time probably is laughing, but you know, I was asked to come back and speak again, and I jumped on it. And next thing I know, I was asked, given a portion of the company, if I would write a book because the manual that they were using was below remedial. And so I started writing the book. And next thing I know, I'm heavily involved in the education world without even wanting to be, attempting to be, but it was fun. It was a whole different experience. And it felt like um, a second chapter in my life that I serendipitously fell into, like on the trading floors. I had no intention of being a trader, but when I tried it the first time, I fell in love with it. that happened, same thing with education. And so that was a company called Trade Secrets that eventually sort of merged with Thinkorswim, and then Thinkorswim got bought out. And so for a brief period, I was managing the traders at OptionEtics, which, was a lot of fun and a big, big audience. But then OptionEtics got bought out by a brokerage firm and everybody left. And so I started my own company because I just was having fun and I wanted to keep doing it. And I wanted to do it in a way where I had control of what to teach instead of what the company thought was what the students wanted. And so I started a company, but my partner at the time was also my girlfriend slash fiance or whatever, and we broke up. And I just gave her the company because she thought she was the only one who was important in the company, and that she was the one who made the company successful. She was a CPA, so she thought the accounting portion was what made the company successful. I'm like, okay, good luck with that. I don't know how you have a trading company without a trader, just doing CPA work, but it's all yours. And so I
At
started
least the books are
Stratagem.
all right.
What?
At least all the books are right.
Yeah, yeah. And you can have them. And she didn't know what she was doing. I don't even know if they're still around. But it's so I started Stratagem just because I wanted autonomy. And by autonomy, I didn't mean being a dictator or even a benevolent dictator. But for leading up to this, trade secrets, OptionEtics, even my company with my girlfriend, Random Walk, it was really me creating material based on what would either sell or what somebody else was thinking would be a good product. And with Stratagem, I just wanted to go off of what the students felt they needed, right? So, like, for example, I've been playing with this Razzle Dazzle trade for the last couple of weeks because we're just sort of in this dead market, right? With the SPX just sitting at 5,200. So it's a good way of being bullish because the market is sort of in this bullish trend, but dead at the same time. So I want to be long the market, but on the days it sits, if you're long of, say, a vertical spread on the day the market sits, you're going to lose just from the time decay. So the razzle dazzle is all setting that time decay. And now the students are all begging to have a full 1 day class on the razzle dazzle. And so the class is being created on May 4th. It's just one of those things where students get to sample everything that they like and say, you know what, this is for me. And then I'll create the product based on what people want, not the other way around where it has always been in the past. Here's a book on this strategy. And then people started selling it, OptionEtics would sell it, Trade Secrets would sell it, Random Walk. They'd push what we were creating instead of what the students wanted. It's sort of like walking in a car dealership wanting a Corvette. They don't have any Corvettes. So
They don't sell
the
you a
car
Pinto.
salesman's trying to sell you, a Hellcat. And
Right.
like, this is faster than the Corvette. Well, I want the Corvette, but it's faster than the Corvette. Well, I me, Tom. I mean, you hear me sell like what, 3 hours a year. you know,
Yeah.
I mean, I think people are going to buy what they're interested in, and if you got to force it down their throats, which was also a negative of this industry, where people were just selling and selling and selling. I mean, trade secrets was horrible. People would show up for a class and they'd be given a sales presentation for the next class half the time. And other firms are like that too, because it's expensive running an education company. And so the owners are always worried about the bottom line. Well, I didn't want to worry about that. I figure if we give the students what they wanted, you don't have to worry about the bottom line. And honestly, I don't even look at the bottom line until my accountants started hounding me in November. So, so yeah, I mean, the latest thing is I've been doing a lot of Razzle Dazzles just to show people, hey, this is kind of cool trade for you guys who think along the same lines where we're sort of just hanging out at 5,200 until the next thing happens. We're in a slightly bullish market, but you could buy a 1 week call spread at 5,200, 5,205 in the SPX, or you can buy NVIDIA and have a pullback like today and it all evaporates. This is a way of staying in that 1 week, 2 week call spread that you want to own and not having to worry about a pullback one day or time decay if we don't move for a week. And people are like, are just loving it and demanding a full 1 day class on it.
And the Razzle Dazzle is high level is just a vertical spread with different expirations on each leg.
Yeah, I mean it's a vertical roll with two different expirations and two different strike prices. So let me give you an example. Let's say you were bullish right now. I don't know. Um, let's say in the SPX or whatever product. I mean, you can pick a product, Tom, if you want, but
Oh, SPX is fine.
okay. I mean, you can, I know NVIDIA is a popular name too right now, but we'll go off SPX. So let's say you're the high in the SPX, is you think is going to be broken because we just keep making new highs. And the high is 5265 essentially. So, and we're just under 5,200. So you think, okay, we're going to pull back a little bit, time to bounce again. And so you want to be long, like say the 52, 25, 30 call spread. Something that's pretty cheap, gives you a lot of bang for the buck if we do bounce above 5,200. And you want a week out in time. Okay, so again, I'll say just so that anyone who wasn't paying attention, or so because I'm going to enter another expiration period. I don't want people to get confused. Let's say you're buying the 25-30 call spread in the SPX, the 52.25, 52.30. Well, if we don't move for 2-3 days, or we have a day like this where we fall down a little bit and sit, you see your $1.50, $1.75 call spread get beaten. And so what we will do is we'll sell daily out of the money call spreads for say 50 cents, 60 cents, 70 cents, whatever, at key points based on probabilities and statistics to take in a half an hour. And after 2, 3, 4 days of selling call spreads at a higher strike than our longs. So we're bought the 25-30. We're going to be selling like the 40-45 or something, taking in a half a dollar. Well, you're taking a half a dollar for 3 days. You get $1.50 back. Now your long spread that you still have 3 days left until expiration is on for free. And now the risk is obviously you sold a spread with a short-term expiration. So we could obviously go through that, but you can just roll it out another day to higher strikes and protecting it. And for example, last week we had on one that everything that could go wrong went wrong. Okay, we our short spread was going towards being in the money, so we had to protect that. Then once we did protect it, the market sold off, and our long spread started getting dangerous and everything. People were nervous, and they all of a sudden saw at the end of the expiration, because all the time decays we were kicking in, we broke even. Now, how many trades can you like do everything wrong and break even? So people just saw like, wow, this really is a malleable strategy that I can always find a way, an emergency exit, if you will, out of the movie theater if a fire occurs. And so they're like, I've seen it under the best conditions and under the worst conditions, and I want to learn more about it. And so they said, I had just people writing us saying, please create a mini class on this. And then all of a sudden, and you know Glenda, how forceful she is. She's hounding me all weekend long.
Make the class. Yeah.
Make the class. People are demanding. I'm like, oh, I was hoping to take that weekend off. Make the class. So I'm like, okay, if that's what the students want, that's, I feel tremendous responsibility for the students who really, and you do too, Tom. I mean, for everybody that's listening, this is a serious game, right? There's real money involved, and you want to give them everything you've got to help them ensure success because losses hurt on so many levels. They hurt emotionally. Some people, they hurt where it's they need the money and they just lost it. It's if it can be avoided, you and I are going to do everything we can to give everybody the best possible chance of surviving a striking an iceberg that we can.
Right.
We're going to have enough lifeboats for everybody. And so I'm like, okay, if they want it, the vacation I was going to plan, I'll move back another week.
Well, that's
I was,
we're in Chicago, so watch out.
yeah, well, there's a lot of reasons why I had to move it back, but, so I'm like, I got to move back a week. And like, oh, I can't because then that, time's in town. Then I got to move back another week. I can't. That's my youngest son's birthday. So now my vacation from May goes to June. But you know what? I'm old fashioned, just like you, Tom. We're on the wrong side of 50.
Yep.
So, the customer is always right. And and it is such a great strategy. I mean, I think I've done 6, 7, 8 trades this month on the strategy because I don't see what else to do when we're just sitting other than sell premium, but volatility is too low to get a lot of money without getting close to the money. So this is when things are slow like this, I always introduce people to new strategies just in the pot classes to broaden their horizons, and they fell in love with it. So Glenda's like, it's going to be May 4th. I'm like, why May 4th? Because that's the only time I got free time. I'm like, well, what about my free time? So,
So, so Scott, if you had some advice to give to somebody new to options, what would you tell them?
oh, great question. Um, Hang in there, I guess, is the best one. I know for me, when I first started trading, and go back and you brought me back down memory lane with your question how I got into this business. I remember I was a little bit intimidated. I mean, I always thought of myself as a little bit above average in terms of IQ. Um, Not a super genius, but I was not going to be working at Taco Bell my whole life. And, I was bright enough to get really, really good grades in a private university without working hard at it. So I thought I was a little bit smarter than average. Not real smart, but smarter than average. And then all of a sudden, I'm coming in contact with these guys who are mathematicians from MIT, and they're the ones who figured out how to price options based on volatility when nobody else in the world was doing it. And then we have Fisher Black up from Black Scholes coming in and teaching us. And I'm hanging around these super geniuses, and I felt a little intimidated. And you know how much there is to learn when you're first learning anything, flying, options, anything new. There's a whole new
Yeah,
vocabulary and
we used to
everything.
say in the Air Force, we used to say, open up your mouth and here comes the fire hose and try and get what you can.
Yeah, well, when I got my pilot's license, I remember I went up for, the usual sucker flight where they take you up for a free flight, and then to get you hooked, right? The first crack of vial, the first crack vial, the first joint is free, right?
Right.
They're drug dealers. And you're either going to be an addictive personality or you're going to walk away from the drug dealer. Well, I went up on my flight. I already knew I was going to fly because I'd flown for a long time before then with friends. And when I was a little kid, I flew around Mount McKinley and fell in love with it. I just couldn't afford it. And so I knew I was going to be taking lessons, but I still went up for the crack flight and land there like, what do you think? I'm like, well, let's do this, okay? And like, yeah, no questions. I'm like, no, let's just do this. I'm ready. They're like, you don't care about cost, you don't care about this, you don't got any questions. No, let's do this. And like, okay, and they go and bring out like I think 9 or 10 books. That big thick FAR book and everything
Right.
else. I'm like, I got to read all this. I didn't read this much in college. And so it was a little bit intimidating. And then the radios, I was flying out Milwaukee, which is the busiest private airport in the world inside O'Hare's airspace. And so you have a lot of radio traffic, and those guys are going fast, and that's a whole new language. I was a little bit intimidated. Options was no different. It seemed like I was the dumbest guy down there because everybody had been down there for a long period of time before me. And it was a whole new language. Bull call spread, bear call spread, jelly rolls, et cetera, et cetera. Deltas, gammas, vegas. But for anybody new, just hang in there. Everything new is a little bit intimidating at first. I remember learning how to drive a car the first time, and my dad sitting in the back watching me as I'm driving down the highway while O'Hare or the Eden's highway is under construction. They had those brick walls up, the temporary walls. So my side mirror is like a foot from the wall. And I'm like, if I take off his mirror, he's going to hit me. I'm just going to have to slam the car and park and run and never come back. It was so overwhelming driving the first time. Now I go from point A to point B and don't even remember the route I took.
I
Um,
think it's important to have a passion for it because then you'll spend the time and effort to really
yeah,
dig into it.
yeah. I mean, you definitely have to love this stuff, and you have to see the benefit. To me, the benefit was I was started out, like I said, on the mark floor. The options pit was right next to the futures pit. I was watching those futures guys. One day they make 100 grand. The next day they'd lose 100 grand. The next day they'd be down 50. The next day they'd be up 75 grand. And it was a rough life. And it seemed like more luck than anything else. And some of the brightest guys vanished. You didn't see them the day after the crash. You just see their names on the wall. You know, John X owes the exchange 1.2 million. Bill W owes the exchange 1.8 million. They're selling their houses, their cars, everything to get their job back. It seemed too much like gambling, trying to pick direction. The great thing about options for me is I understand that options have 5 variables associated with it. It has delta, gamma, theta, vega, and rho. The hardest one to predict is delta. Where's the market going tomorrow? I don't know.
Flip
But
a
I
coin,
know,
right?
I don't know. It's going, but I don't know where. Right? We got CPI out tomorrow. What's it going to do? I don't know. But time decay, that can't stop the clock. So theta is a cool variable to play with on an option that you can't do with stocks or futures. Volatility, I don't know if which way the market's going, but I do know eventually volatility is going to go up or it's going to go down. If it's too low, it's going to go up. If it's overextended, it's going to go down. All the other variables about an option are so much easier. Almost, almost, and I hesitate to say this, but almost too easy, right? When the market is crazy and you see the VIX at 60, you know for a fact there's a revision to the mean. It's going back to a 15. You don't know when, but you know it's going to a 15. If you go out and buy AMD at 170 right now, and it goes to 100, you know, these people on TV will say, well, go buy more at 100, your dollar cost averaging. Okay,
Yeah, tell
genius.
that to the people who bought Enron.
Exactly. As a matter of fact, I got the Enron flag in the auction. When they were auctioning off their asset, I bought their flag that was on top of their building. But yeah, you can dollar cost average all the way to zero and it'll never come back. Volatility always comes back. So playing the stocks and stuff was more gambling than I think I would have made a living doing. I would eventually got killed one day. The great thing about options is you can quantify your risk. Now it's a little bit more. You're playing chess when the rest of the world's playing checkers.
That's a
So
good
if you're
way to
starting
good
out,
analogy.
if you're starting out, the rules of chess are a lot harder than the rules of checkers. But now you don't have to beat the market. You just have to beat the average,
Right.
right? And look around this world. Average intelligence is not too hard of a, you know, thing to step over. you know,
That's true.
I mean,
Well, Scott, why don't we wrap it up and then you can probably come back before your class and tell people about the class, maybe like the week before or something, and do
sounds
a
great.
roundtable. All right. Well, thanks for
Was
your
there any
your great
questions?
stories.
I saw some questions
Um,
pop up. Any, or
no,
you want
James
to just
asked, is
address
it
them later?
well, he just asked, is it too late to sign up for your collar class?
Oh, the
Um,
collar class? No, I mean, people are jumping in now still, right? Because
okay, and
it's,
they get recordings and all that, right?
yeah,
So,
they get everything from day one. There's a book that comes out. I'm writing along the way, you know, I'm probably a third of the way done with the book. So everything that we've done is included because it's a complete like course that people are actually just, instead of me just writing a book and then sending it out, they're participating in the book writing. So we got people signing up right now. Um,
and I think that Aramir 10 coupon should work, right?
yeah, yeah, yeah,
Okay. All right. So
definitely.
thanks
Yeah,
very
yeah.
much, Scott. Really appreciate it. These
Oh no, Tom, I
Trader
appreciate
Tuesdays are
it.
great.
You guys, you got like the best students in the world. Everybody that like contacts me after one of these things is just unbelievably polite and gracious, and you know, especially to my staff. You can yell at me all you want, but never yell at my staff because then I get protective like a dad. But
There you go.
I've never had a problem with your people. They're the greatest people in the world.
Yeah. Well, yours too, Scott. And we're looking forward to seeing you in Chicago and have a good class. And we'll be in touch about the roundtable. But thanks again. Really appreciate it. Great story, great career. And it's always a pleasure.
Oh, thank you, Tom, and thank you for everybody.
All right. We'll see you guys.
Bye.